Hi everyone, today let's talk about the Red Sea supply chain issues, as well as government funding just for a moment. And then for today's stock, let's go ahead and talk about Fedex. Then we'll get into the usual data as well as the charts. And then we'll finish up with my accounts for today and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So they say here the Red Sea attacks have already become a larger issue than the supply chain issues that we saw during the pandemic. I think this might be a little bit exacerbated, but let's go ahead and look at the data that they're talking about. And they mention that the Houthis are affecting supply chains in the Red Sea. We've been talking about it for a while here, but again, the data in terms of billions in trade, they mention here average weekly deviation in terms of capacity. And you can see that peak low here. Going back to 18 December, we saw a decrease of 57%, which is lower than the decrease we saw in March of 20. And then we had the Suez Canal blockage. Obviously, that was much worse, down at almost 90% in March of 21. But sure enough, the numbers are lower than what we saw in March of 20. And then we also had a low number here in March of 24. So apparently March is just terrible for shipping pretty consistently. 2020, 2021, and now 2024 all have been pretty awful, especially considering the fact that March of 2024 has not happened yet, but somehow we have data for that. So I'm also curious on how they are projecting those numbers. It says data as of January of 24, but it goes all the way out here to April of 24 somehow. Definitely curious. I wonder if that has to do with the fact that shipping takes so long that it's projected out that far on a week-to-week basis. Potentially doesn't specify there, but certainly interesting. And the question is, are those impacts so strong that we're going to see a tick higher on inflation due to shipping costs? Certainly possible, something to watch for. We haven't really seen it yet. Inflation continues to remain quite low relative to what we saw during COVID, but if it ticks higher, that could absolutely put a damper on markets going into the first half of this year. Moving over to the stopgap bill. If you didn't know, the government's money does run out on Friday, which is a bit of a bummer, especially for those of us who are employed by the government. Senate did pass a bill 77-18. It's now going to the House. We'll see how that one goes. They say it was a recent deal between Speaker Mike Johnson and Senate Leader Chuck Schumer, so it's expected to be fine and get passed in time before the government runs out of money on Friday, probably why markets have not really reacted to this. And then they mention here the left was condescending to the right, saying that this is the logic of the hard right, probably because they were trying to pull in spending at least a little bit, and this current government continues to fail to do so, despite the out-of-control spending. Moving over to stocks to trade, stocks today. The stock today was Fedex. Barron says it is a buy. The stock has dropped 11% to $250 since December of 19, and they do say the sales for 2024 are expected to fall in the low single digits, which is worse than the previous guidance of flat growth. Of course, a company that's not growing is not typically great to invest in, but they are still making a bunch of money, $17.75 per share. That's a pretty good number, and they are expected to overhaul their cost structure in 2024. And typically companies that do this are not in great shape, but if their restructuring goes well, then they can be much more profitable in a more medium term over the next few years. So probably not a short-term investment, something that you need to be bought into for a bit longer term. And they mention here by 2026, they're trying to raise their operating margin to 9% and increase their sales to $99 billion from the $88.3 billion in 2024, which would raise their earnings to $28 per share, which again would obviously be a big impact on the stock. If they resumed growth and increased operating margin, Fedex could be an opportunity. Moving over to seasonality, we were expecting bullishness on the NASDAQ based on this graph. Everything else was supposed to be basically flat or slightly down on the day. We're in this 11 to 12 trading day range, so looking for dips across markets except for the NASDAQ, which was a rally, but basically everything rallied super aggressively, which was interesting. So I was looking for a little bit of bearishness, but sure enough, everything turned super bullish. We'll see how it plays out. from this period forward all the way up to trading day 18 is basically flat for all markets except for the Russell 2000. You can see Russell 2000 during election years does tend to be a little bit more bullish during that period, whereas everything else is generally flat. Moving over to the economic calendar, initial jobless claims came in much better than expectations. Job market continues to remain very strong. I thought that would have sent yields higher to the point where it would have made markets a little bit weaker, but it certainly didn't happen. Philly Fed manufacturing came in much lower than expectations, and the previous number was also revised down. So still seeing weak economic data, but strong jobs data. And then looking at tips, came in at 1.8 for 10 years, so inflation expectations continue to remain low. And then Fed balance sheet only rolled off about $13 billion, so not a huge week for the Fed there. Overall, pretty good, but still seeing weak economic data. And then looking at tomorrow, just some light Michigan numbers. And then at 10 o'clock, you do have existing home sales, could be fairly interesting. Moving over to Max Payne. Currently sitting at 460, stock price way above that. I thought we would continue to drift towards that 460 level, but at this point, we're basically at the top of the puts, just a few dollars off of it. First put wall is 475. We're already above that. Next call wall would be 480. So between those two peaks would make sense if we don't get the sell-off that I've been talking about closer to that Max Payne number. There are a ton of options in the market, 5.4 million with a put call ratio of 1.7. So all of that to me would indicate that we'd probably land closer to that midpoint. But right now we are close to the top of the puts. We're above all of the put walls. 480 seems like the top of the markets for tomorrow, with 478 being really the top of the puts. Moving over to the charts, you can see we rallied super aggressively up to that 55 EMA, kind of consolidated here, and then look at those last 3 hours. Wicked all the way down to 472, finished all the way up around 477, hit that trend line, pulled back a little bit. Still a very, very strong day, 0.89% here on the SPY. This kind of invalidates my thesis right now, so we didn't get all the way to the neckline. I was really expecting a test of this lower level, closer to that 467.70 area. Didn't get there. We rallied super aggressively to the trend line, almost to my near-term resistance. Didn't quite get there. Let's go ahead and extend that out as well. 477.33, didn't quite get it. And then at this point, you would expect a breakout up to that 479.30 area. That would be your all-time high for the SPY. Does seem like that's where we're headed. Let's go ahead and look at momentum. Yep, step towards bullish as you would expect. We're right at the SMA on RSI. If that breaks out tomorrow, we're probably going to see a continuation. At this point, this looks more like a consolidation between these two levels with a slightly higher low versus this previous low at the beginning of January. Looks more like a bullish move going into tomorrow. Moving over to the NASDAQ, similar thesis, rallied aggressively, held up much better during the mid-session and then rallied aggressively into the close. Broke out above multiple levels, all my short-term levels, all of my longer-term levels, all broke. We're above everything here on a closing basis. And you do have to trade the price action that you have, so everything looks strong, especially with the volume. Massive volume on the day. Big breakout, everything looks clean after touching that trend line yesterday. And again, you have to trade it the way that it is. We had bearish momentum yesterday. We had a fake out, rallied super aggressively, and that's how you have to play it. Moving over to the Russell and the Dow. Russell did the same thing, rallied aggressively, hit the 55 and then pulled back. Higher low setup from yesterday's lows. Turned into bullish momentum, broke above the 55 EMA after hours. Next level, 191.89. Above that, you have some short-term resistance at this trend line, up around 192, right around that 144 EMA as well. Let's look at that on the daily chart. Similarly to everything else, big move down, threw a wick to the downside, rallied up. Does seem like this level here is holding at 187.80. That is a short-term level for me. Not super impactful, but you can see it is marked by these wicks here on Friday, 8 December. And then looking at the Dow, clear double bottom, threw some wicks, rallied aggressively all the way up to the 200 after breaking out above that pre-market high, 373.25, all the way up to 375. Bullish momentum, bullish RSI. Again, back above this level here, 373.74, and then your next level, 376.35 to the upside. Moving over to the Fedex charts on the weekly chart, this does not look super great. You can see that candle here on 18 December. That was your big down move, but it is in an area that does seem interesting. So we're back into the middle of this consolidation. I would really be looking for a test of the 55-week moving average down at 237.60. You can see that's just below my level here at 239.34. Let's look at it on the daily chart. Does seem to be holding up fairly well after that massive gap down. I think that was an earnings event potentially. Massive gap down, consolidating here. It's holding up fairly well, like I mentioned. Did get very close to these lows here from 9 November and the lows here on 13 October. So it's holding in that range, certainly interesting. If this 239.34 level breaks, however, then you're looking at a lot of downside. So be careful. Daily chart below all the EMAs and SMAs. But like I said on the weekly chart, you got the 55 and the 144, and then you could get all the way down to the 200 sitting at 229.09. That's also right in that highly traded zone. So that looks very interesting to me. A little bit more downside to come potentially, and then look for a bounce in that zone. Moving over to Apple. Apple decided to rocket higher. We talked about that being a potential double bottom here at the 200 SMA. Sure enough, 3.26% to the upside. Momentum continues to roll towards bullish. Volume, big, RSI, breakout above the SMA. We're right at that 21 EMA. If it rejects here, that could be interesting. But if it breaks out, there's a lot of room to the upside. 189.96 right in that 190 area. Let's go ahead and extend out that trend line right in that same area as resistance. If that breaks, 194 is up above as my next resistance. And then interestingly here, Tesla continues to look very weak, even with markets being very strong. So big bearish candle there, 1.7 to the downside, closed below my 214 level for the first time in a long time. Last time that happened is going back to 9 November. So big rally. Retraced all of that at this point. We're right in that same zone. Momentum and RSI are both bearish. Did hit oversold conditions on the daily chart with an RSI of 28.79. So that's interesting. But at this point, this does look quite weak. And if you extend this trend line out to these wick lows, that could give you something to trade off of. But there's definitely no structure here yet, just looks bearish. Moving over to AMD and NVIDIA, these are the stocks that continue to drive higher. Semiconductors continue to be very, very strong, making all-time highs on both of these here today. It did give a lot of that back after wicking all the way up to 168.59, pulled all the way back to this consolidation at 158.27. So lots of volatility in there, $10 range on that, but then it hit this trend line, rallied up into the close, continues to look very strong. Similarly on NVIDIA, rallied pre-market, gave it all back, hit the trend line, bounced into the close, and both of these continue to look strong. Moving over to staples and discretionary. Staples basically flat, 0.12. Nothing has really changed on the thesis, slightly bearish momentum in RSI, but still in the same consolidation. And then looking at discretionaries, big update, 0.57%. Let's look at it on the larger scale here. This is still a lower low from this previous low, but we rejected that pretty quickly and then rallied up. Momentum did tick towards bullish. RSI still bearish. Volume fairly strong on that candle. Let's look at it on the hourly chart. You could see a higher low setup off of that wick low. Touched the RSI, rallied up. It's above the 50 line, slightly bullish momentum. Definitely in a consolidation at this point. You can see we're above the short-term EMAs, below all of the longer-term EMAs. Needs to make some clear movement. Typically, these are not great where you see a big break, retest of that 200 area, and then a breakdown, but it's holding up fairly well. Higher low setup, short-term price action looks slightly bullish. Moving over to technology and semiconductors, both of these massive gaps higher, big breakouts, everything looking very, very strong. Let's go ahead and add some levels at these previous wick highs. You can see we gapped to that level, retested, and then rallied up. So bullish momentum, bullish volume on technology continues to look very, very strong. And then similarly here on semiconductors, big gap up through the trend line, touched it, rallying up. I think that's an all-time high here for semiconductors. Yep, previous high here going back to November of 20. So this was your all-time high. And look at that week, 4.26% already. Bullish momentum, bullish RSI. Everything looks very strong on both of these. And like I said, semis are taking the NASDAQ higher. Moving over to breadth, you can see we had a massive pickup in breadth. Pretty surprising, honestly. 20-day average jumped back above 36.60. So it looks like we're going to hold that level, at least in the short term. You can see we hit oversold conditions yesterday, ended up bouncing from that level. So a little bit of strength on the 20-day average. We've seen this before. We saw a bounce like this on 9 January, and then we continued to fall. So could absolutely be a short-term bounce, but it is something you have to respect. We did break a resistance. And then looking at the 50-day average, this actually looks even stronger. Continue to test that 68.66 level. Momentum bearish, RSI did perk up, but it is still technically bearish. And we're still below this trend and below the 55 EMA. 9 and 21 are below each other, so that is technically still a downtrend, but slight bullish candle. That's the first one we've seen in a few days. 9 January was the start of the down move, all the way to 17 January. Now on 18 January, we got a bullish candle. We'll see what happens from here if we get one or two continuations. You would expect it to fail up around that 83, 86 level, close to that 21 EMA, kind of a back test on that move. And you can see a similar move to that where we had a pretty consistent down move, consolidation, pulled back to the 21. That was where you found resistance, and then it did continue lower at that point. But it did give you about 4 days in a row of price action plus a 2-day consolidation. So something like that could happen here. A couple of days of bullishness, find some resistance, and then we'll see what happens. Moving over to yields, 2-year yield, basically flat, continues to hold in the same zone around 4 1/3. 10-year continues to rally to that 55 EMA at 4.18. I still think we're going to see this go back to normalized conditions. We have to make it all the way up to this 4.35 level if the 2-year holds in the same zone. So it's got a little ways to go. Got some EMAs to break. Bullish momentum, bullish RSI here on the 10-year. Continues to make sense. But even with this rally up, retest of the 21 rally continuation, we're still seeing markets go higher. So it seems like markets don't really care about this right now, even with cuts kind of being priced out of the market here in the short term. Moving over to put call ratio. I mentioned this yesterday, but look at this wick high that we got up to that 1.4 level. We talked about how that typically marks some bottoms in markets when the put call ratio gets that high, and absolutely sure enough, we got a big rocket to the upside across markets. So something to pay attention to. Ended up working here going into today's session. Moving over to the dollar, you can see we did dip down after hours yesterday, rallied up into the open, and then sold off from that level in the mid session. And that ended up being basically flat on the day, slightly bullish momentum. RSI still bullish. But look at the structure here, seems to be a little bit of a rising wedge. The strength here was not quite what you would wanted to see to kind of level out this trend line. If you see a break up to these next highs, up around 104.20, that could be interesting. But right now what we're seeing is this structure here. We have not closed above it. We kind of wicked it a couple of times from this previous low to current levels. If you like this structure here, that's also a little bit interesting. Not as indicative of what we've been seeing. I think this here from the lows in December to the wick high in January and then current wick highs seems a little bit better. Again, if we break out above this, that could be bearish for markets, but right now the dollar seems kind of stalled out at resistance. Moving over to JNK and TLT. JNK showed a little bit of strength. Markets went higher. JNK also went higher, which is good. Confirm the rally. Not super strong, but you want to see those move in the same direction. TLT, on the other hand, continues to crater as we expected. Yields continue to look strong. TLT continues to look weak. Almost got to the 55 EMA, just barely missed it. The low for the day was 93.51, and then the EMA sitting at 93.47, so missed it by just a few pennies. Volume on that continues to be quite strong. Momentum continues to be quite strong, so TLT continues to break down as yields go higher. Moving over to volatility, move index didn't do much of anything. VIX, on the other hand, did fall quite sharply. Let's go ahead and zoom in on that a little bit. You can see that wick high to that group of resistances up around 15.5. Then you can see we gapped up to the level 14.9, and then we fell really strongly right to that next trend line. Momentum still technically bullish, RSI still bullish. So I'm still watching this trend. Does seem like we're going to find some support down around that 13.7 area, so you have a little bit more downside before we find strength, in my opinion. But watching this structure, we'll see if it holds up at support down around 13.7. Moving over to my accounts, I did make some money on the day, so we're back above 14,000. You love to see it. IWM position, continue to do nothing with that. Still holding 187 for 15 days from now for $7. That's in a little bit of a profitable position, which is good. So we now have shares in profit on the day, and we still have profit on the call. So we're in good position. My max profit here is up around 194. If we start to break out from current levels, I can make adjustments. I have plenty of room here since we're down at 15 days. See how that plays out still. Plenty of protection all the way down to 180. So good position there. And then looking at the Qs, I did roll out as we broke out to the upside all the way out to 43 days from now. Didn't really want to do it that way, but the rally was super aggressive. We took out all of my resistance areas, and then that looked super strong. So I had to play it the way that it was presenting. So now I'm out to 400 400 and 403 for 43 days from now, which puts my max profit on this position up around 420 or 421, right in that vicinity, in about a month and a half. We'll take a look at the profit graph after this, but that gives me a little bit of room there. And then I've been playing the TQQs in my smaller account. It is leveraged, which is not great, but I'm playing it pretty small. Just one put here and then one covered call, as it looked super bullish going into the close. And that is just one day from now. TQQs only has weekly options, so you have to play it in a little bit longer time frame. And like I said, it is leveraged, so you do have to be a little bit careful there. And then XLE, no change. Still holding that one call that I was using for protection. Probably going to expire worthless. Just continues to kind of sit on my balance sheet. So everything bullish. Still giving myself plenty of room to the upside as markets broke out. Moving over to that profit and loss graph, you can see now max profit at expiration is $9,000 because of all of those credits sitting on those call options. The stock price is currently sitting around $413.30. And like I said, I have all the way up until about $420 is my max profit. So $7 per option times 4 would give me about $2,800 potential profit over the next month and a half. And you can see my break even actually moved down a little bit with that roll out. So it's down to $379 before I would start to lose money on these positions. Let me know down in the comments section what you think of the Red Sea shipping crisis and whether it will impact inflation over the coming months. And if you like Fedex, or if there's any other stocks you would like me to go over, definitely put those down in the comments as well. That would be great. And then make sure you hit the like and subscribe and hit the bell if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.